Good day, good evening, good morning from wherever you're watching us from. My name is Kazal. Welcome back to Think Trading and Investing channel, a channel that gives you personal finance tips, investing and trading to help you grow your money. All the things that I mentioned today will be under the link in the description below. So please stay tuned as we dive into the content of this video, and also I'll give you tips on how to get started with your trading and investing journey. So without further ado, before we can dive in first, people often use the word trading and investing interchangeably. Well, today I want to tell the difference between, because there is a difference, and for people outside they think it's the same, but for us who are inside, we know that they are very much different. So we're going to dive in what makes these two money growing seem different. The first thing we're going to dive in is, what will you learn from this video? Well, first of all, you're going to learn the definition of trading and investing, so that you will not speak like the average person out there who doesn't know the difference between the two. Secondly, we're going to dive in and look at the goals which traders have versus the ones which investors have. Then thirdly, the belief that both traders and investors have concern their strategy. How do traders make money compared to investors? Two different ways. Periods of which traders participate in the market versus investor. What tools do investors use that contrast to traders? What protective measures that traders and investors use? And I believe by the end of this video you will know the difference, and you will know which one is best for you to use at your current financial state. So firstly, let's look at the definition. So trading refers to buying and selling stock. It could be any other investment asset. It doesn't necessarily have to be stock, but for this context, let's just use stock. Stock on a regular basis in order profit based on fluctuation in market price. So it is the belief that we can make money through stocks or any other investment asset by just looking at price changes. So how prices change, we make money doing that. So usually traders, mostly day traders, are participating every single day, looking at that price movement and seeing how they can profit from that. While investing refers to a period in which an investor makes a profit based on interest. So in other words, investors are more interest based. They're not looking for price fluctuation. Rather, they believe strongly in the set asset stock, that there is certain fundamentals involved that would drive the asset or stock to greater heights in the coming future. So that's basically one of the principles of investors. So before we continue, a quote from Warren Buffett: calling someone who actively trades it is like calling who repeatedly engages in a one-night stand a romantic. Well, if you don't know that, I don't know how best to describe it, but yeah, that's technically what it is. Although it's quite a unique way in describing the difference, but yeah, it's technically what traders do. So the goals of traders versus the goals of investors. So trading involves the buying or selling of shares or an asset in order to generate return on money. So basically, traders are just concerned with buying and selling because the price moves every day, every week, or even every single second. So they want to make money now. They're the quick money-making quick people. They tend to look for that fast buck, that latest trend, that latest news event that would drive the market the precision that they anticipate. Usually traders are more technical with analysis rather than fundamentals, although there are some traders, stock traders, who are fundamentals, mostly technical based because they're the price. However, even a graduate building wealth over a period of time holds investment asset or instrument. This is true for Warren Buffett, where he's got some stocks of companies like Coca-Cola and Apple, which he has invested for many decades, and he still has it in his portfolio, and they keep growing every single year. And that's what made him a billionaire, because he gradually held these stocks and continued to continued to buy more and more of these stocks to enhance his net worth. So investors are mostly concerned with net worth rather than making cold cash. So traders are more aligned to liquidity. So they want the money. They're looking for quick ways to liquidate their positions, but if things get out of hand, he will leave the market immediately. So how do traders make money compared to investors? Traders will buy at a low price of a share and investment asset, and mind you, this is very crucial because there's a lot of people, and in the financial industry we call them dumb money, but I don't necessarily like calling them dumb money. But there are a lot of people who apply this principle in the opposite. So they will buy something like Bitcoin or any currency when it's at its peak. And usually when something is at its peak, you should get ready to sell. But yeah, so traders buy at a low price, share price. This is due to daily price fluctuations. While investors reinvest all their profits from an existing instrument or dividend form stock to buy an additional stock investment asset. Investors are not looking for daily fluctuation, but growth over time. So whatever happens today, tomorrow, whatever's going on in the news, the investor is not even concerned in the slightest bit. They're more concerned about, in the long run, the fundamentals that drive this asset will pay at the end. So periods of which traders participate in the market versus the investor is the traders can be divided into the following groups. So there's a scalper who, as you can hear the word, they scalp for opportunities. So they literally are not there for like day traders, where day traders would open in a few hours and close it. A scalper is just there to take profits for a few minutes and leave, few minutes and leave, few minutes and leave. So a scalper can open like 20 positions or more in a day, but he's not in there for the long run. He will leave every minute or even seconds. So they just scalp for that little price fluctuation. But then there's also day traders who, as I mentioned, are there for a couple of hours because they realize that their technicals or any, well, if they are fundamentally based, any of their strategy will work for a period of time in a day, but before the markets close for the day, they would have already taken profit. Well, a swing trader is different. A swing trader can be there for 2 days, 3 days, or even weeks, because their strategy permits them to stay that long until they've taken profit. But however, an investor who is a position trader can hold for months, decades even, to achieve their investment goals. So what are the tools that investors use that contribute to trade? More inclined to technical analysis, so they use technical indicators, moving averages, bond and RSI, stakes, and much more. Investors more inclined to fundamental analysis and to perform a lot of research. You contrast to investors, trades for a stop loss order. So the difference between this is stop loss takes you out of the position, while a stop limit is for buyers. So what happens with the investor is when he gets into the market, he allocates his when he wants to come in, and all this time he will not be in. But if the stock, however, does not go in his favor, the execution will not happen at all. So unlike a stop order where the execution has already been done and this is just to avoid losing money, stop limits order, however, is the investor not being active in the market at all because the share price has not reached the targeted area. So he is protected. That's kind of like their protection from any dangerous price fluctuation. And as I said, that prices fluctuate every single day. That's why we've got traders. So thank you very much for staying tuned. And I've got a bonus. Let's continue learning. Let's continue with this process of engagement, for we want to grow our money in the coming year. Let's click on the link below. Thank you.